All right, let's go ahead and get started. Good afternoon, everyone, and welcome to another fantastic learning opportunity in virtual learning through your friends here at AAHOA. We're delighted to have you. Today is another one of our incredible three-part series with Calibri. Today, it's AAHOA and Calibri present Get Certified in Profit Strategy. My name is Sean Tibbetts. I am the Senior Director of Education here at AAHOA. And as I said, we're delighted to have you with us. Joining me today in the background is Michael Schwartz, our Senior Coordinator for Membership Development and Education. Michael is a critical part to our education team here at AAHOA. You may have seen him during a hotel owners conference during the year or worked with him across education and membership. Our email addresses are very easy. You can reach me at sean@ahoa.com, and you can reach michael@ahoa.com. Or you can reach our education department at hoa@ahoa.com. As I said, we are delighted to be here, and I'm going to go ahead and turn off my presentation and welcome Jennifer Hill back to our virtual learning.
Thank you so much, Sean. Again, welcome everyone. Thank you for joining part 3 of our partnership webinar kickoff series. I'm Jennifer Hill from Calibri, and we're really excited to share with you sort of the third and final part of your membership benefit package. It doesn't mean that you're not going to see me or us around. We're actually going to hopefully do more education with you as the new year starts, and we certainly will see you in Philadelphia for AAHOACon next year. This is the third in our series to get you introduced to the member benefits from our recently launched partnership. So again, Sean mentioned you did not have to attend parts 1 and 2. If you have attended parts 1 and 2, you are going to find the front end of this pretty familiar. So you may be able to multitask until we get to the certification section where I'll walk you through how to get signed up for that. But I do want to let you know that as we get started and before we dive into a little bit of context setting and the overview of the certification, that we did get some updated data this week. So it was a little later than it typically is. So still wanted to share that with you and highlight for you some of our year-to-date performance. So the year-to-date performance is in the left-hand column, so that left-hand bar in the darker color, that teal blue, and the next 30 days on the books as of last Friday is in the right-hand column or bar here for each of our segments in that peach color. So really, essentially, not a ton has changed since the last time we have updated it. We are still flat across all segments across the US year over year, year to date. We definitely are continuing to see OTA and promotion and loyalty member rates grow. But one thing that was or is different rather is that year to date, we're still up 3% in other, and other includes AAA, advanced purchase packages, senior discounts, and new this week is that it's also up 6% for the next 30 days. So when we looked at this earlier this week and the same data last week, that was flat over the next 30 days. So just highlighting here for other specifically, as well as rack bar, we've seen a little bit of a surge of business on the books for the next 30 days. So really, a pretty good sign. Again, essentially flat year over year. And that's across all of the US. When we start to break it down by our markets or submarkets, we track 334 markets and 975 submarkets, which are the smaller geographical areas. Of our 334 markets, over half of them are flat or negative in year-over-year growth, and 44% of our 975 submarkets are flat or negative in year-over-year growth. These numbers have changed a little bit since the last update, but essentially we're still experiencing kind of a overall flat performance, but these are the most updated numbers. And as we always like to be top of mind and offer you fresh data, I wanted to share those with you today. So this really says it all. Revenue growth has plateaued. It's flat. We just saw that. But we know costs haven't. So we really are focused on helping you stop the shrinking when it comes to profit in pretty much 100% of the cases. The only way to protect value is to focus on profitability, really make that our first concern, not just driving occupancy or rate. And that does count or matter even when we are looking at a softening demand market, or let's say your whole market's just been running 50% for the year. It isn't just about filling those rooms any way you can, because as you know, that's going to cost you. So part of what we're doing through our AAHOA partnership is to help you keep more of what guests already pay. So if you're running a 50% occupancy or a 92% occupancy, we want to ensure that you're keeping as much of what the guest is paying as possible. We're building this partnership to give you as owners profit first training and tools, not just more revenue metrics. And I've been quoting an article from AAHOA's from today's hotelier, from someone in the AAHOA leadership team. Owners must arm themselves with data to make smarter, faster decisions in a changing market. And that's exactly what we're here to do and to support you with. So on October 28th, we discussed our first member benefit, which is a discount on our Hummingbird commercial platform. So this is going to help you with any hotel that's currently in operation, whether you have one hotel or you have 100 hotels. So Hummingbird commercial, your member benefit is a 5% discount for a 12-month subscription. And that jumps to 10% if you commit to a 2-year subscription. And if you subscribe by the end of next week, we'll give you 2 additional months for free. The conversation that we had on Tuesday of this week was centered around Hummingbird Market, which is a new tool. So we are offering an additional discount because it is a new tool. So 15% for year 1 for Hummingbird Market, which is designed to help you make investment decisions, development decisions, things like that. And then if you commit to a 2-year deal, we'll give you 15% off in that first year, and then it drops down to 10% for that Hummingbird Market subscription. And we will also bundle that for you with 3 free trend line reports if you subscribe to Hummingbird Market by the end of the month. So I know it's a little confusing. We have a couple of different products, but keep in mind, again, Hummingbird Market, I'll review very briefly today, but definitely built for development and investment decisions. Hummingbird Commercial, more of your day-to-day operation, revenue growth, how you're generating more opportunities that are profitable. And then officially launching today is our Certified Hotel Profit Strategist program. So this is fully online. It is self-paced. Some of you, I think I recognized some of your names that came in as attendees. So some of you will have seen some of the content if you sat in on our sessions at AAHOACon 2024 or this past spring in New Orleans. But we also are going to launch early next year a Certified Hotel Profit Analyst program. So that's going to be a shorter amount of time. And that's going to be great for those who are just coming into the industry or maybe into your business, coming out of school. We're going to focus that program on a lot of younger folks, for what that's worth. All right. So number one thing we always want to talk about here is you are not alone. That's the benefit overall of having a great organization like AAHOA to support you. What a wonderful community to understand how certain trends in the industry are impacting you. But everyone is really experiencing sort of this triple threat. Access to customers, a continuing evolving loyalty landscape, and then profitability. Highlighting again, profitability, lack of revenue growth, rising costs, and efficiency is becoming more challenging. There's more and more competition every day. So the way we describe this is we have a simple math problem, right? We're experiencing muted revenue growth. Again, year to date, earlier we saw a flat performance. Over the next 5 years or so, we're not anticipating that we'll see growth too much bigger than 3%. And we know there are persistent and continuing spikes and growth in expenses, roughly 5 to 10%. And it's made all of us have to get really creative about how we're running our hotels, how we're getting our customers. And we know that you're struggling with profitability in most cases. I hope that there are more of you than we'd guess that are not facing sort of this tightening profitability challenge. But if you are, know that you are in good company, and we're all out here fighting the same fight. As a result, investments in hotels have slowed, in some cases stopped, depending on the market or submarket. And this has always been a really good investment opportunity, right? Like, it's a great real estate investment. It's a profitable operating business within that real estate investment. So we want to help owners move past legacy benchmarking, past legacy underwriting, so that you have the information that you need to know to make really good, smart investment decisions, and then really good, smart operational decisions. What you can control, really, primarily labor costs, cost of acquisition, right? So labor is a never-ending battle. I know, there's lots of conversation, of course, and rightfully so, around what's been happening in Los Angeles, and then what is potentially going to happen in New York City. So these are trends that we're keeping an eye on as well. And while you're trying to manage labor, cost of acquisition is something that we at Calibri are uniquely positioned to help you with. Our data comes from over 35,000 hotels on a daily or weekly basis, directly to us. This is a proprietary data feed. We're collecting a granular level of detail. So every reservation record that comes to us, we get 87 fields of information, and we take that and use it to help us break down where there are additional profitable opportunities. So that's both looking forward and backward. We also are the only benchmarking company that collects cost of acquisition data. So this is really important because, as you can see on the screen, customer acquisition costs are 20 to 30% of what guests are paying to stay in your hotel. That's a pretty big range, but it varies again by season, by hotel, by demand, market, submarket. But this is consistently what we're seeing. And this is up from a prior range that we used to share that was 15% to 25%. So it continues to grow. When we collect that customer acquisition data, we're using it to calculate three types of revenue. I know one is often hard enough to keep track of and to grow, but hopefully you'll see the benefit in looking at this in a few different ways. So we start with hotel collected revenue, which is going to be the most familiar or traditional metric we work with. This is going to tie back most closely to your STAR report, to your own financial reporting. We start with hotel collected revenue, and we're able to gross that up with those costs of acquisition, primarily in this case, OTA margins and markups. When we gross that up, we end up with what we call guest paid revenue. And guest paid revenue is as straightforward as it sounds. It is what the guest is paying to stay in the hotel, whether it is directly to the hotel or through a third party. And if we take a break here and just look at a really quick example, the guest is paying $100 to booking.com, and you're collecting 85 of that because you've paid 15% commission to booking.com or to Expedia, right? That's a big gap that isn't represented anywhere on the P&L today, versus booking that same reservation on choice.com or choicehotels.com, right? So $100, you're going to collect more of that at the hotel level if the guest books directly, of course. We have additional costs of acquisition over and above those OTA margins and markups. We also collect information like retail commissions, so a traditional 10% to BCD travel or something similar. Loyalty investment, the percentage that you're paying back to the brand or chain if you are a branded hotel to award guest loyalty points. And then channel costs and transaction fees, sort of those tech touches that get the reservation from the point of sale to your property management system. We deduct all of those costs from guest paid revenue to calculate a kind of net revenue metric we call COPE revenue. COPE is an acronym. It stands for contribution to operating profit and expense. And I like to think of COPE revenue as revenue that we're keeping from what the guest paid, right? So we want to help you as owners keep more of what your guests are paying. And the way we can do that is by creating focus and putting a spotlight on COPE revenue. But of course, you're also making sales and marketing investments to bring business into your hotel. And we also will account for that mostly in our industry reporting, but we do understand, of course, that is a big expense item. So that further is deducted from guest paid revenue to then calculate what's labeled here as net revenue. So why does all of this matter? If you take a look at a full year, so I know we're coming up to the end of 2025, but our last full year, of course, is 2024. We had $208 billion, billion with a B, in guest paid revenue. We netted as hotels $168 billion of that, right? So that is a calculation we call revenue capture. That's 80.7%. And that's a decline of 71 basis points year over year from 2023 to 2024. If you look at that 0.7, it equates to $1.5 billion, again, billion with a B, of a revenue capture decline. And then you apply sort of a standard example you'll find us using as an 8 cap to that overall calculation, ending up at almost a reduction of $19 billion in hotel asset value in 2024. And you might be scratching your head or kind of wondering, how is that possible? So when we have looked at historical performance in the US and with legacy benchmarking tools, we've been focused on hotel collected RevPAR. So this is an example from 2015 through 2019, where it seems like we were just going to keep on stepping up. Nothing could stop us. We were growing. Everyone was really happy. But at the end of the day, as you see on the right in those blue columns, we were actually keeping less and less every year of what the guest was paying. So yes, they were paying more. It looked great on a star report, but I bet none of you have ever taken a star report to the bank to cover payroll, right? So we want to make sure that you are keeping as much of that 86.25 as possible. And of course, that number has increased because we had really strong recovery and rebound from the impact of the pandemic and the recovery. So we still are experiencing growth in RevPAR, but our revenue capture continues to decline. So it has never been more important to focus on what it is that we can control around our opportunities in terms of revenue capture, cost of acquisition, rate category, and channel opportunities, and really focusing on that. So kind of, lightly made the joke about taking your star report to the bank, but at the end of the day, it really is a vanity metric. You're looking at your performance versus the average performance of a group of your competitors. And if you get 100 index, that means you're average. You're meeting the average of that competitive set. What we want to really be focused on, what you want to be focused on as owners, is profit. Like, is driving profit and making sure that you are creating cash flow that then creates additional and improved value for your asset, right? So we want to help you do that. And one of the reasons why it's become more and more of a focus is, of course, just the changing economics around buying a hotel. So if I quickly go through this example of what it looks like in 2019, we're going to look at an asset that's $10 million. Again, we're going to use our really simple and straightforward 8 cap. That means it's throwing off $800,000 in cash flow. Pretty good. For us to buy this $10 million asset, we're going to take a 65% loan. We're going to do that at a 4.5% interest rate. It might have even been better in 2019, but we're going to be conservative. We're going to call that 4.5%. And so we're going to come up with $3.5 million. We're going to put that in. Our debt service becomes $300,000. So overall, a nice spread, $500,000, right? So compared to what we've invested, 14% return. Everybody is super excited about that. Fast forward to where we are today in 2025, we're going to pay that same $10 million for an asset. We're still going to calculate this example using an 8 cap, but money's gotten more expensive. So we're only going to get a 60% loan, and we're going to do it at a 7% interest rate. So now we have to come up with $4 million. Our debt service is $420,000. And so our spread shrinks to $380,000. And that's great. Let's imagine that our expenses have stayed static. They've stayed the same since 2019. So we'd have a 9.5% return on our $4 million investment. Pretty good. But we know that expenses haven't stayed the same. So we have to start with that $380,000 and account for the additional expenses, and using just sort of a amalgamation, aggregating additional information we're getting from our hotel partners. We're going to put in another $50K for reno reserves. That's higher than typical. We're going to pay $40,000 more for insurance because that's gone up. Our property tax has increased. We know our labor has increased, and this is probably a very conservative estimate at 5.5%. And our cost of acquisition has continued to grow. We saw that across the US. So now we have $270,000 of additional expenses, and that reduces our spread to $110K, right? So it's still positive. We're not, we're doing a little bit better than breaking even, but our investment on that $4 million is now 2.75%. We could probably do just as well with like a money market account, right? So this isn't to scare you away from the investments you've already made or making additional investments, because we can change this. It is going to take all of us, but it can really, we can shift the tide, if you will, in terms of this trend, because we can control cost of acquisition. And the way that we're able to do that is through scaling with our data, right? So we're not going to only keep focusing on top line revenue. We're going to focus on profit. And through our partnership, you're able to, of course, enjoy the benefits that I talked about earlier for Hummingbird Commercial and Hummingbird Market. So those calls were recorded, but I am going to quickly give you just a slide overview of those two tools in case you weren't able to join us. So Hummingbird Commercial is a software as a service product. It is available today for any of your hotels, and it is purpose built for commercial strategy so that we can help you identify your hotel's most profitable business mix, identify incremental revenue opportunities, truly understand who you're competing with for which types of business and on which days of the week. And it allows you to take action from those insights really quickly so that you can pursue those opportunities no matter what channel they're coming from. Hummingbird Commercial is a one-stop shop for everyone on a team that is charged with creating revenue growth, right? If you have a bigger team and you have a sales manager, maybe you have a area revenue manager, maybe there's a digital marketing manager, e-commerce manager that works with you, or maybe it's a smaller team and one person is trying to do all of that. Hummingbird Commercial is really built for that. We have a ton of information all in one place, including summary view, optimization view, which is going to show you those additional revenue opportunities. Third party view is home to 230,000 named corporate accounts. So for your special corporate or business transient accounts, imagine having that amount of account information at your fingertips. We have on the books data, and we have really great property view information to show you everything from your occupancy, ADR, and RevPAR to how that breaks down by channel and rate category by day. We're continuing always to build and enhance Hummingbird Commercial. So anything that comes in as a new element to that tool, if you are already a subscriber, you get that for what you're already paying. The second tool that we've talked about is Hummingbird Market. As I mentioned, this is pretty much brand new. We're about 10 weeks in. And this tool was designed for developers and investors, owners, operators, management companies, and consultants and advisors, right? So this is a higher level view of overall performance in those 334 markets, 975 submarkets that we track. And it is looking at more segmentation. So we're going to break down performance by chain scales. We're also going to show detailed rate category segmentation. And if you are an owner who has or are interested in building extended stay, purpose-built extended stay assets, we have length of stay segmentation that is super helpful in making those decisions about where you want to build, right? We want to make sure that there's demand for long-term stay in the markets where we're building those hotels. So our goal is to help you find new opportunities, profitable opportunities, understand your demand in your market and submarket, and really think a little bit differently about how we're managing our customer acquisition costs. So we'll provide that guidance in Hummingbird Commercial and in Hummingbird Market. We'll give you breadcrumbs to follow so that you can go from insight to action. And one of the other things that we want to do is just support your overall knowledge and industry expertise when it comes to profit strategy or commercial strategy. So again, I know I recognized a couple of names from the attendee list, so it's good to see you again. We have officially gotten everything online. So we're a profit strategy certification tool officially. I am going to send a link here to Michael and Sean and ask them to please share it with everyone. And you'll see it's taking me a second to type because it's kind of long. But we'll also give you other ways you can access this. So when you click that link, whether you do it on the AAHOA website, the Calibri website, you click it in the chat in a minute or two, you're going to see an area to get registered here. So first and foremost, the sign in tab is going to show up and you're going to go, well, I'm not signed up yet. So you're going to click the sign up tab. And then when you click that sign up tab, you will fill out some required fields. So first and last name, email, your password, company name. We are asking you for your AAHOA member number and your phone number. And these are all required fields. You'll click that sign up button. And by doing that, and you'll also see this in the platform, you are accepting that there is a fee for members and there's also a fee for non-members. We're probably not going to run into the non-member situation because we're requiring your AAHOA member number, but we still wanted to make sure you understand what the pricing is that has been built into our partnership. So once you've completed all of that, you're going to go into the platform, and there's still just one more step. You actually have to click register up here. I'll point it out for you. So register, and that is going to allow you access to all of the curriculum and courses you see below. So when we do that, we'll click register again by clicking sign up, and then by clicking register, you're accepting that fee. But then the course is live for you. So now you'll see here these circles that will get checked off as you go through each section. There are 7 modules. Each one has 3 to 5 sections. I don't think there are any modules that have more than 5 sections. And we purposely broke it up into smaller increments. So, if you only have 5 minutes when it comes time to do module 1, section 4, you know that you can jump in and take care of that really quickly. There are quizzes along the way just to check your knowledge, make sure you're feeling comfortable with the content. It is okay if you don't get all of the answers right on the quizzes. All right, so let's say you go through module 1, you're halfway through module 2, you have to sign out and go do your day job, you run a hotel, you have a family. How do you get logged back in? So the same view, the same link, you're going to click the sign in tab next time, and you're just going to enter your email and the password that you chose, and that's going to take you then back to your course page. So you'll see this. Okay. So again, when you click that link, if you're already registered, you can use the sign in tab. If you're signing up for the first time, you will enter in your information, and I have to do a new email address every time. And just put in all of the information as requested. And then we'll be able to click sign up. It will take you to this screen. You'll be able to click register. And then what this is going to look like for you here in just a second, I'll switch over, is this. So you can click start. It will take you to the overall certification. You'll just click play here, and then it does go in order. When you are finished with each section, you'll just click next down here in the bottom right-hand corner, and it will show you what is next and how long it is. So again, you get to decide how much time you're going to be able to invest. When you get to the end, you will find the final assessment. So again, I know some of you have taken some practice tests for us, and this will be similar but different. So if you want to take this final assessment, even if you've gone through the content before, you're more than welcome to. And then there are also some course materials. So we have a PDF version of our Demystifying the Digital Market, as well as an additional supplemental video around action levers, where I walk you through some ideas of how to take advantage of the opportunities that are identified for you, using any tool, but specifically if you are using Hummingbird Commercial, those will apply really well to Hummingbird Commercial. To go to our website, you can just click in that upper left-hand corner, and we do have on our profit, actually, I already have it pulled up for you. We have a special landing page for our partnership. So if you're interested in learning more just in general about our suite of products, or if you want to share this link with someone on your team who wasn't able to join our series of webinars, we'll take you through all of the opportunities for our products. So as you keep scrolling, you'll see Hummingbird Commercial, Hummingbird Market, and our Hummingbird certification, or sorry, our certified hotel profit strategist. Still getting used to a new name, but we'll have that available for you, and you can submit information. So always looking for ways to be in touch with you and be able to get you information about our platform. This is, of course, also where you could log in directly to Hummingbird Commercial if you become a subscriber. So let me share my screen back with you here and take you through just, again, a reminder, great discounts. We want to help you, this organization, your great community, be the change in this industry, really start to shift toward using profit as our North Star. So we're excited to work with you. This QR code that I'm pointing to is going to take you directly to that website that I had up, our AAHOA page. So again, if you're interested in getting a demo of the tool, you can always reach out to me. But we're also more than happy to to set up a demo with you using any of our sales team members for flexibility and scheduling. And then I'll pop that back up there just while we wait to see if there are any questions. So you have my email address. And if I haven't said it before, I'll put it on record here in the recording and with Sean and Michael, that if anybody reaches out to you and would like my contact information, please feel free to share it.
Absolutely. Jennifer, thank you so much for this presentation. We are so delighted for this partnership. I know I am. I know the rest of AAHOA leadership is. It's been such a joy working with you. I can't thank you enough for that. With that said, if I don't see any questions, Jennifer, any closing remarks?
Just please reach out with any questions at all. If you're not sure if this is going to be a tool that's right for you, let's talk through it. I want to encourage you not to make assumptions based on your hotel, if it's 60 rooms or 600 rooms, right? Give us a chance to explore with you. We are always keen to make sure that it's a good fit. So that's one thing that I'll emphasize. The other thing that I'll share with you just really quickly, that hopefully everyone who attended webinars 1 and 2 will also hear this at the end of the recording of 3, is that our client-facing team, our account management team who supports you, are all folks who have worked in hotels. They haven't owned hotels, but they have been in hotels. So, I think one of my more frustrating experiences when I was on the hotel operations side of things was having a partner at a vendor that didn't know what it was like to be at a hotel. So we have folks who were general managers through COVID. We have folks who were sales managers through COVID. We have, revenue management experience and expertise. So we really pride ourselves on making sure that our client-facing team are well-versed in hotels. They might not have 30 years of experience, but they'll have, earned a paycheck working in a hotel and hopefully have a pretty good understanding of how it is difficult to manage your time on a day-to-day basis with demands of guests and employees. And, the linen truck is late and you're out of washcloths and it's 4 o'clock and it's check-in time, right? So those are all things that, I like to highlight and hopefully make you feel more confident as owners and operators and working with us as partners.
Excellent. Jennifer, thank you so much again. We can't thank you enough. I look forward to continuing to working with you on education here virtually, as well as live events like AAHOACon, and I know there's much more to come. I plan on taking both certifications myself, so I'm looking forward to that. With that said, folks, on behalf of all of your friends here at AAHOA and your friends at Calibri, thank you for attending. If you do have questions, I've went ahead and I put an email address for AAHOA's education department, which is hoa@ahoa.com. With that said, thank you for attending and we'll see you next time. Thanks, everyone.